When Frank and I first started learning about the stock market, we didn't know anything when it came to when to buy, when to sell. We didn't know anything as far as like the terminology. What is a bull market? What is a bear market? What is earnings? I know you're all thinking like, what is this? That's how we felt when we were really learning about the stock market. But also the other piece is that you don't have to know everything when it comes to the stock market as long as you continue to keep growing. That's why we're here. We're here to really walk you through what is the stock market, right? What it actually is, how investors as ourselves make money in the stock market, and some of the myths that we always hear in regards to the stock market. So come along this journey as we continue to talk about and really break down the different terminologies, different things, just how to really learn and how to be empowered when it comes to the stock market.
Please like our video, subscribe to our channel. Yeah, there's a scripture I read yesterday that really came to mind, and it's in Ecclesiastes 11:2. It says, invest in 7 ventures, yes, 8. You may not know what may come up on the land. And so it highlights the truth that you need to have more than one investment. And so as we talk about the stock market, basically, what is the stock market really?
Yeah, I want to go back to before I jump into like what is actually the stock market. That Bible verse my husband just read is so powerful, because when you think about that verse, it really talks about like the different streams of income that you can bring into your household, so you're just not relying on one income, like your earned income. So that it really resonated with us as we read that Bible verse yesterday. But what is actually the stock market? A lot of people really think the stock market is like this giant, complicated machine that is controlled by the Wall Street experts, right? You know, a lot of people think it's gambling. It is for the rich people. Not only that, but a lot of people think it is too risky, right? There is risk when it comes to investing, but life, you know, anything we do can be risky. But the stock market is really it's based on the different companies. And what we mean by the companies, I'll use this as an example. You go to the grocery store, right? You go to Walmart, you go to Target, you buy groceries. You go to Macy's, you buy shoes. You go online to Shein. My ladies out there, you go on Shein or Amazon and you buy clothes. You're buying a product, right? You're buying something similar to the stock market. You have a business like Amazon or Meta, like Facebook. You're buying a small piece of, you own a small piece of that business. That's pretty much what it is. So you owning a small piece of that business, tiny piece, but you still own it, right? And so when you think about that, here's another piece. Franklin and I, we own a bakery. And Franklin and I, we sell cakes, we sell pastries in this bakery. This bakery is really doing well. Like, we are really booming. So now, because this bakery is doing so well, we want another location, and another location that we know that is going to grow and just exceed, right? But we don't want to go to the bank. Like, we don't want to go to the bank and take out any loan or anything like that. So what we do is we'll sell our part of our ownership, our business, to the investors, which is us, which is yourself, so many people out there in the world, and we get a part of that. But what that is that person really loves our company, and so they're going to invest in our company. That's really what the stock market really is.
That's really good. I'm glad you broke it down.
Yeah.
And so you really highlighted a very fundamental point, which is, owning a stock of a company is gaining ownership. There's an ownership interest there that's very important as an investor.
Yeah.
And so that's really good. Thank you for sharing that.
No, you're welcome.
I like the bakery. I like sweets.
That's why I did it, because we love sweets. Okay, baby. So for you, how do investors like ourselves make money? I think that's one of the biggest questions that people really want to know, right?
Yeah, and so basically, investors make money 2 ways in the stock market. when they buy a stock, say they buy the stock at $50, and then the stock goes up over time, say a couple of years, and it reaches $100, they will make a gain on their stock investment, which is called, the stock appreciated or appreciation. And so that's a really good gain. I like that. I like the 50. That's 100% return. I like that. But also the other ways they earn money is dividends.
Yeah. Mm-hmm.
Which dividends are cash payments
Right.
that companies pay shareholders or owners for owning their stock.
Right.
And so you can receive a monthly or quarterly dividend on your stock ownership. And so that's a way to grow your stock, portfolio.
Right.
You can reinvest that dividend and gain more shares.
Right.
And so those are two of the basic ways. There's many ways in the stock market to make money, but for beginners, for people who are starting out, those are the two basic ways investors make money in the stock market.
Yeah, and I know that Franklin and I, we're throwing out different terminology around like the dividends, the shares. We've also created like 50 terminology guide for you, for beginners, and just for anybody that really need to understand what all of the terms mean. So we just want to make sure that we add value to you so you can understand as well, because we didn't have all of that. We didn't have all of that when we started investing.
Yeah, that's good. That's great. And so moving right along, the next question I have for you, baby, is why do stock prices move up and down?
Ooh, this was the most frustrating part for us when we started investing, because when you think about the stock market, like you buy, and then it goes down. You're like, okay, what happened? Like we got into this stock, and now this stock can just drop. But then also it can go up. Like news, like anything can rise that stock market or bring that stock market down. But sometimes too, we can buy at the wrong time. Like we can buy when it's too high, knowing that we should have brought it when it was low. And we'll be able to explain. We got a whole nother video for you on that piece, because that piece we had to really learn. But if you think about that, it's pretty much when the news come out, or the interest rate changes, or fear, like it can just go up and down. So I will use this as an example. I'll go back to our bakery example, because we love sweets, right? So when Franklin and I, so say for example, we have to report out, and we'll go over earnings later on, but we have to report out, this month, and we report out, and the report is really good. And so people start buying more ownership. They start buying more shares of our bakery. So that increased your value. But then, as we know, everything is going up, right? Our ingredient starts going up. Well, people get nervous. So what does that do? It decreases. Our value starts going down, so people start selling. So that's what we talk about when it goes up and down, because it can go up one day, it can go down one day. That's why it's so very important for you to have an emergency fund, because investing is a long-term. And when we think about that emergency fund, I just want to throw this little nugget out there. My husband and I, we created what's called an emergency fund blueprint that is now on our Stand store, that you can really have to really understand and really build an emergency fund, because you really need that before you start investing, because it can go up and down. So if you need the money right now to do something like an emergency fund, that's not the time to invest, because you need that emergency fund. So I just wanted to throw that out there too.
Thank you. So you really highlighted, supply and demand.
Ooh, supply and demand.
And so when there's more demand for a stock, the price of the stock goes up. So there's more buyers stepping in.
Right.
And so when there's more sellers, in there, there's plenty of supply, the stock goes down.
Right.
And so those two principles, that's what caused the stock to go up and down.
Right.
And so the more buyers that's buying the stock, the price go up.
Right.
But when there's more sellers that are in control, the stock goes down. So those are two principles just to keep your attention, to make sure you focus on.
I love it. Baby, what are some myths about the stock market?
I would say one of the biggest myths is the stock market is a casino. Some people think the stock market is just a casino. You're gambling.
Right.
It's like you're playing the lottery. But really, the stock market is not a casino. It's not the lottery system, because actually, when you buy a stock, you're buying ownership. When you buy a lottery ticket, you're not buying ownership. Or if you're at a casino, you're not buying ownership. But at the stock market, you're actually becoming an owner of a company. Right. You have an ownership interest. And I think that's the biggest difference. And when you have a long-term horizon, when you're gambling, you have a short-term time horizon.
That's good.
But when you're investing, you have a longer-term horizon when you are investing. And so those are biggest difference, or the two biggest differences on the stock versus, a casino or gambling.
Right. I mean, we have so many more myths that we hear all the time, but we would tell you is that once we started learning, and learning takes time. It's not going to happen like overnight. You're not going to. It's just not. And that's just like when you started driving. You started driving, and you literally at the age of 16, and it took you a moment to really understand the different things you need to do to drive. And that's similar to like the stock market. You really, it's about being consistent over time and continue to be intentional about how you want to invest. But not only that, I think one of the biggest things that Franklin and I have been able to do as a couple that really has helped us on our journey is that we really talk a lot about like money, investing, and our future, like our growth and how we're going to move together as a couple. So that's one of the things that we will tell you is that learn investing, the stock market together. Like learn it together so maybe you picked up on something I didn't pick up on, or I picked up on something you didn't pick up on. We learn this thing together so we can move our family forward. And also the other thing is that, like my husband said, it's not a gamble. You don't need $1,000 to invest in the stock market. So don't let anybody tell you that. You don't need to be perfect. You just need to be consistent and continue to learn and continue to grow together so you can move forward. You had any last words so far?
No, I thought that was really great. I think, being able to get started, that's half the battle. And so as you start, you don't have to start, like my wife said, very big. You can start very small, but as long as you're consistent, you can automate it and then just build your shares, whatever investment or whatever companies you want to own.
Right.
And that way you are able to just, you're not jumping in the pool all at once, but you're gradually walking into the pool.
Yeah.
And so it'll help you learn along the way.
Yeah, I agree. And so we hope that this video truly, truly blesses you and your financial journey. We just wanted to make sure that we bring you value and help you understand the stock market. There's going to be so many more videos around the stock market because there's so much information out there that we really want to break down for all of you all.
Please like this video, subscribe to our channel so you can see what's coming next. Your financial journey is better together.